Good evening, everybody. Welcome to the Sunday night strategy session for June 7th, 2015. Hope everybody had a wonderful week. We're going to start off and we're going to talk about what economic reports to look for this week. The G7 meeting started today, Sunday, and they continue tomorrow, Monday. We have the JOLTS job openings on Tuesday. Nothing really important on Wednesday. On Thursday, we have core retail sales, and the weekly unemployment claims, plus import prices. So a lot of stuff going on at 8:30. 10 a.m. we have business inventories, and on Friday we have PPI at 8:30. Once again, pre-market, but at 10 a.m. during the trading day, preliminary University of Michigan consumer sentiment. So if you are trading intraday, you do have to pay attention to that number because it can move us. It is rated a red. What happened with the market this week? Well, for the most part, we went sideways, and we started to drip down Thursday and Friday. Friday, we formed a spinning top candle, a small spinning top candle. It's in the spirit of a doji. It's a pause candle. It's an indecision sign. It's a sign of indecision. That's telling us that, hey, you know what? Maybe we're not in such a rush to go down. I mean, we'll see. One of the good things about these candles is that you can bracket them and look for a move either way to confirm, all right, are the bears indecisive? We just pulled back a little bit and now they're indecisive and now we're going right back up. Or maybe it was a Friday, it was the end of the week, and maybe the bears when I'm talking about the bears and bulls, I'm talking on the short term. I'm not talking about the long, what they call the long time frame players, right? Or the large time frame players. I apologize. So could the bears, the short-term bears, did they just run out of steam Friday? And if this spinning top were to give out, my opinion is we're going at least to the bottom of this wedge where we broke from. That would be the target of the pattern, number one. But number two, it would also put us, it would also continue to keep us in this range as we have been for many months. Nothing saying that we have to always move in a directional bias. I got an email this week, somebody saying, well, can you just say whether we're going higher or lower? I absolutely can, but it's a guess. Right now, we're in a range, right? We're back inside this multi-month range that's set up. We did a fake out break a couple of weeks ago, and we just couldn't keep it going. All right? That's all I got. I'm turning it over to Paul, who's going to go over the other indexes as well as some other things that he's looking at. One thing of note to keep in mind is that last week's volume was lighter than the previous week, and the previous week was actually a short week. It was only 4 days because of Memorial Day. Anyway, that's all I got. I'm going to hand it over to Paul, and everybody have a wonderful night and a great trading week.
Okay, good Sunday evening, everybody. I'm going to catch my breath as I try to talk, as we just came in from a very competitive and spirited family kickball game, which the good team won, which is my team. So I've been running around like a 6-year-old. Okay, let's see, where should we start? Let's go into Friday's employment report. So we know that last weekend I said I totally dismissed that bogus minus 0.7% GDP report. I said everything I look at says the economy's getting stronger, going higher, going better. Friday's employment report further adds credence to that because we grew jobs. We revised previous months up, and this month came in above expected at 280. unemployment rate ticked up a drop, but that was because of that labor force participation, which means people are finally, after years, it looks like they're finally going back into the workforce. Does it matter a whole lot for what we're talking about? Not really. It's big picture stuff. But for me, what matters is the number came in better than expected, and I think it's going to continue that way for the rest of Q2 and into Q3. Now, as I've always said, it's not what the news is, it's how the markets react to it. And as you can see from this screen, there wasn't a huge reaction on Friday. But what I'm going to note right out of the box is that the Russell, a couple of days in a row, was the leading index, the strongest index. So that's of note. Put that on the front burner because that's important. Nothing has really changed in my intermediate term thinking that any and all new highs can be sold. I don't think we're breaking out yet. Ultimately, I think all systems are go and we're going to fire off to the upside. I just don't believe it's now. I think there's still too much. Price patterns aren't great. Every time we rally to a new high, they're sold. If you believe in volume patterns aren't great. Sentiment is certainly anything but great. It's not as bad as it was, but it's still in the red flashing category. So there's not a lot to hang your hat on in the short term, but I also don't think we're gonna collapse. So on the Dow, could we pull back to 17,000? Absolutely. This would be my worst case scenario would be that we'd pull all the way back below 17, maybe go to 16.9, form a bottom, and then we take off to the upside again. So short-term stochastics they're all going to be pulled towards oversold. It was Friday the low, or can we go lower before we bounce? Yeah, I don't have a feel either way. Although I will say that if we do rally to the upper end of the range, to me it's a selling opportunity. Here is the S&P 500 IVV, a little more bullish candle than the Dow, but we're getting a little nitpicky here. And same thing, not as oversold as the Dow, right in the middle of the range. We could pull all the way back to 2,000 on the S&P, and it won't really change anything for me. Mid caps, you should definitely notice something different with the mid caps, and that is, one, Friday's candle was really nice. It's a hammer, but really a hammer within the context of a trading range, so not as strong as it would be if it was much lower. And the mid caps traded really well in a mediocre at best tape. So as we go to small caps, they were downright bullish on Friday. And stochastics are still in a very powerful spot. I think I told you guys, I can't recall when, but somewhere in here, I sold my S&P and I bought the Qs and the IWMs, and I still have those positions. Although I did raise cash 2 weeks ago, as I mentioned last week. But this looks really nice right now. This could definitely support a move back to the old highs and probably through it on the IWM, which is the small caps. And the Qs look somewhere in between the mid cap and small caps. They're only a 2-day rally away from new highs, but they're not as strong as the small caps. So that's the major indices. The takeaway is, I'll repeat the comment I made last week. I think you got 4% on the upside and 8% on the downside. The downside outweighs the upside. I don't think you're going to have a huge move in either direction for a while. But you certainly can have plays where you buy into the lower end of a range and you sell as it breaks out of the range. But I wouldn't get too hog wild to load up the boat, long or short, at this time. Europe clipped me pretty good last week. I got out of Europe on Thursday here. but it wasn't a good week for Europe. And Friday was downright ugly. So you've got two gaps, 1, 2. Maybe we'll get a third and call it a triple. But you had one here, one here, one here. You get three gaps. I guess this is a little gap here. I still do like Europe, and I think you can buy it into a pullback. So I just happen to get stopped out. So be it. And EEM, which I like the countries more than the EEM, got blottoed last week. It was a very rough week for emerging markets, and that's because U.S. interest rates went up. And that means if your debt is denominated in dollars, kind of sort of got a problem. So EEM took it on the chin. I did nothing. I still own FXI, which really did nothing last week. It's hanging in by a thread, getting oversold in the lower end of the range. I'd want to see it hold right now. And I still own EPH, which got hit really hard, much to my disappointment. I thought that this would have been at least a trading low, and as I mentioned last week, I'd want to sell into a rally, or the rally never materialized. I'm stuck with a small position in EPH. And Hong Kong, I still own, and I like that it continues to go sideways. That's emerging markets. Let me stop for questions. Oh, Rob, you're guessing. My system has some issue. Yeah, Rob, I do have charts up, and I'm using the mouse to run around the charts. Ralph, hang with me a couple minutes. We'll get to gold in a bit. Okay, so let's go on to the three key sectors. We'll do these. Hold on. We'll do semiconductors first. I said it last week. It's hard not to be bullish. You had a nice pullback. If you need a long, it's certainly, if they're going to hold, Friday was the low, and if you want to take a long in the semis, it's fine. Friday was the low. If it closes below Friday's low, which was a tiny, tiny, tiny stop away, you get out. Otherwise, you can play the semis to the upside right here. They look good, really good. Banks. I've said it for weeks now. I'm bullish on the banks. I think it's a second half of the year story. Beautiful breakout on Friday in the banks. I think you can buy any and all weakness in the banks. I think they're going to go higher. Transports, I give them a little bit of credit. You know, they've been under a lot of pressure, but not really, except for this. This is pretty ugly. But it hasn't been any kind of dramatic pressure. You know, lately it's been more drips, maybe an absence of sellers. But I love this action right here. You got 3 days in a row right up against the 153 level. And to me, anyway, it looks like if the bulls are going to take this thing up, it's right now, literally, right here. So the trannies were really good on Friday, and so was energy. So there you go. Before somebody says, well, what about oil? They are rallying with oil being strong. So this is an interesting formation here. Let's see, you guys like jets. The airline ETF does nothing for me. I have no interest in it. All right, let's go to the other sectors. Here's software. I've liked it forever. Still love it. I think it's going back to new highs. So you can certainly own software. Keep your stops tight, but this thing looks very good. Telecom. You know, this is a pattern. At first blush, I would say this thing resolves itself lower, down to 28. But the longer it goes sideways, the less grip the bears have. So we'll see what happens. But I still don't love telecom yet. This is one of my sector plays of the year that's been wrong, along with utilities. Diversified financials, definitely not as strong as the banks. So your, you know, the Berkshire Hathaways, which has been brutal. Brutal. Berkshire Hathaway. And the other diversified financials, American Express, Capital One, blah, blah, blah. So I definitely like the banks better than the diversified. Consumer, I wrote about it a couple of times already. If the economy is so bad, why is consumer discretionary literally 2 good days from all-time highs? I believe this over any newsprint, any media reaction. This says to me we're going higher in the economy and the markets. Retailers not as strong as consumer discretionary, but they're still fine. Ultimately, I think we're going to new all-time highs, but I'd rather own XLY than XRT. Home builders, one of my sector plays of the year, continues to look good, and I don't think the highs are anywhere near in. I think you can buy any and all weakness in the home builders, even though rates are going up. Okay, rates went up sharply during this move, and the home builders could barely downtick. There's a sign of underlying strength there. Industrials will probably do better with a weaker dollar, but that's not a high conviction comment. To me, it's dead money. It's a pair of twos, no interest. Same thing with basic materials. I don't like them at this stage in the recovery. And then even from a chart standpoint, how they trade, they're pair of twos, nothing to write home about. XLE Energy put in a nice day on Friday. This is a very nice digestive consolidative pattern. And now we're trying to form a bottom right now. OIH, I bought more of on Friday. So I guess that speaks volumes. What my thinking is, if we close below Friday's low, I will stop out and walk away from that piece I bought Friday. But it looks like the bulls at least want to try one more rally effort. We'll see if they get it this week. XLV, I still own a huge position in. I still like it. Probably not going to touch it for a while. That's healthcare. Trade's fine. It's one of the leading sectors. Had a nice day on Friday. We're right near all-time highs, and ultimately I think we're resolving to the upside. Biotech, I still own a big piece of as well. Hard to argue with its behavior. And to me, this looks like we're coiled up and ready to explode to new highs. Hope we do. That'd be great. I have an ongoing battle with Zero Hedge about biotech. So when I hit 300 and they were all bearish as they normally are, I said it's going to be 400 or bust, and I think we're going to get to 400 before long in IBB. So those are the sectors. I'll just add GDX while I remember. Gold. I did buy a little bit of gold. GDX, not the natural product. I did buy a little bit of gold on Friday. And my stop is a close below Friday's low. So let me pause here and see. Let's see. Oh, I have one question. Is the SOX not showing? Wait. Is the SOX not showing a blow off top the other week? No, I don't believe it is. I don't think this, I don't believe, is a blow off top. It's only a one-day move, and a real blow off top, if you go back at 2000, really takes off. This is a one-day move on M&A news. With Intel buying Altera, you could light a little fire under the investment bank. Yeah, absolutely, Gavin. So if the Dow runs 2,000 points from here, you could even argue that IYT doesn't even make new highs. It could be a move back to 168. So yes, it would not be healthy for the market, and that would cause me to be much more concerned than I am now. But for sure, it could happen. Because you go back at in the peak in 07, 08, and the peak in 99, 2000, and the peak in 98, they definitely diverge before major declines. Okay. Defensive sectors, XLU, Looks like, I've talked about it for months. Looks like garbage, remains garbage. No interest in it. IYR, REITs, looks like garbage. Maybe you got something here on Friday. Maybe. Upside down lollipop. Maybe on Friday. And XLP got smulched last week. So our three defensive sectors got hit pretty good. So what does that tell you about the economy if our three defensive sectors are getting hit? Okay, we shall forge on. Let's see. Gold. Yeah, I said I bought some GDX Friday. It was a low conviction play. Hard to say that gold looks good. I've been saying it for months and months. I think ultimately gold's going sub 1100 and probably towards 1000. Could it bounce here? Yes. Would it be a big bounce? I don't think so. Silver, same thing. Maybe a touch stronger than gold, but I don't think it's going anywhere. Okay. I think gold, you got another year or so to wait before the real bottom comes, and then you can look for 1,000 points, $1,000 move in gold, but not yet. TLT just killed me this week. I didn't like it from a trading standpoint, but one of my strategies that trades it, which is purely mechanical, bought it back and then sold it. But it was a tough loss. I hate buying near a peak and then getting stopped out near a low, but it is what it is. Certainly stretched to the downside. I imagine from sentiment, we're getting closer to a trading low in TLT. Let's see how it looks on the futures chart. Yeah, I think we're getting closer to a bottom in the bond market. This week, next week for sure. The 10-year is right back. So early in this year, as you know, my range was 150 on the downside and 230 on the upside. We just poked above 230 right now. We'll probably go to 250 before we bottom, but I think the bottom in bonds or the tops in yield is coming in the next 10 trading days. Junk bonds, here's the PIMCO fund. They got blottoed this week too. I sold half of my junk bond position in this, and I sold all I had in J&K. I sold that well. Thankfully, I did one good thing this week because it was not a good week. J&K, I sold into here, and they continued down, down, down. I don't think this top is the top. I think whatever decline we're going to have, I think there's another run coming in J&K. So I wouldn't get too bearish yet. If it continues lower, 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 obviously we'll reassess. I just don't think so. And the AD line is really getting weak. Last week we saw this was a huge warning sign because the Dow was making all-time highs and the AD line couldn't. Big warning sign to keep on the front burner. Very important. Very, very, very important. Let's see. Okay, no questions, so we will go on. Very quiet group tonight. So we did bonds, we did gold, we did equities. Let's do the dollar. Dollar did really nothing last week. I don't really have I do not have a strong opinion heading into the week of the dollar. I mean, if it rallied back, poked above these highs, wouldn't shock me. If it rolled over, back down to these lows, wouldn't shock me either. FXE, same as the dollar. I don't have a strong opinion. Could go either way. Yen, as you know, I've been bearish forever. I'm still bearish. It is really stretched to the downside. I think we're close to a trading low in the yen, but I'll still say, as I said for years, short any rally in the yen. We're not over yet, or for a while. There's copper, which continues to do nothing. Don't love it. I want to wait to see some kind of bottoming action after this pattern failed. So I don't really have an opinion on copper. Natty gas, same thing. The bulls have been locked and loaded long forever in natural gas, and there's just no solid constructive bottoming formation yet. So we sit and wait. Good day for crude on a Friday. Crude's been in this beautiful trading range. It is definitely wound up and ready for a big move. We could just blast off one way or the other, or we could poke above or below the trading range and then go the opposite way. So I'm still long, so you know where I'm thinking, but I'm not stupid. If it goes against me, I will get out. But I'd like to see this 65 level hit, which closes the gap and then fulfills the upside projection I mentioned earlier in the year. That's crude oil. Let's see. Someone's going to ask about the loonie. So here's the Canadian dollar. I mean, again, I'll say this. I think I said the same thing last week. I would take a shot long with the Canadian dollar. You got a little divergence. And this looks okay for a trade. FXC. Let's see any questions. Let's see. Oh, Johanna, I just answered your question without even getting there. Rick, I am not sure the answer yet. Tiny and I have a ton of stocks on our watch list, but I'm not in a hurry to put out a bunch of trades if I don't think the market's going to go anywhere. But yeah, we'll definitely take them as they come. Let's see. Yeah, I'm going to have Rick. I'll have Tiny. We'll put something in the newsletter about that. Let's see. Bill, if the AD line has lower lows and moving average in turning down, how can you remain? Bill, because the very simply, good question, because the AD line is not a timely indicator, meaning it could be disastrous for months and months, quarters and quarters, and sometimes 2 years. It could be a disaster before the market turns down. It's not a coincident or a leading indicator. It's usually a heavily lagging indicator, but a long-term one. So I'm not really. It's at AD line could drop another 500 units, and the S&P and the Dow could go to 20,000. So don't get hung up on this yet. The time will come to get really hung up on it. John, what's the best way to play energy? I mean, USO, the problem with USO, John, is that it's a broken ETF. It's nowhere near where the price of crude is because of contango in the futures market. So it's a crummy ETF. Now, I think OIH, it's a stock way to play the movement energy, and it's a little more aggressive. It's a little more leveraged, but I prefer OIH personally. Although, for full disclosure, I own a little bit of everything. Any correlation between copper and the home builders? No, there's not. Lumber and the home builders has some correlation. There's lumber. But neither one is very, copper, no, and lumber is not very strong. Let's go on to, I forgot some of the ones you guys like. Tan, no opinion, I don't love it. It's maybe this is a big top. Maybe we're headed back down to 32. I don't love the ETF here at all. Internet FDN, which I trade from time to time. I do like the internet stocks. They continue to trade well, and I think if the Qs break out, these things are going to break out and then some. Social media stocks look fantastic. Boom. This thing Wednesday and Friday says, we're going back to all-time highs in the social media index. Hack is one I mentioned on Charles Payne's show a long time ago. I had a huge day on Friday with all this new hacking garbage from foreign governments. So keep that one on your radar screen. Oh, it's funny, Scott. I just saw your hack. Great minds think alike. Let's see. Thoughts on SRS. Is that the inverse bank index? Wait. SRS is the leverage bank index. Oh, ultra short real estate. I wasn't even close. I mean, that's just the same as what do I think of IYR, which is it's gotten bludgeoned lately. Friday's action is questionable for a bottom. I don't know. No, I don't have a strong conviction on this. What impact will a potential pullback to 17,000 have on the semis, banks, and should they look very good? I mean, Robert, if the Dow pulls back a couple thousand points, or let's say 1,000 points, there is no doubt in my mind that semis probably go back another 5%. No doubt in my mind. And the same thing with banks. We're not going to go down 1,000 points and the banks remain immune. They'll go down, and then I'll be standing there waiting to buy them when the Dow bottoms. Let's do some commodities. They all have huge smart money longs in them. Here's wheat. Okay. We talked about wheat last week being a possible long after. No, we didn't. I'm wrong. It wasn't wheat. Take that back. So here we got wheat. Once again, 1, 2, 3, 4, fifth time into this level on wheat. And then Friday it reversed. I would certainly not be short wheat. I'd look to be a player on the long side of wheat with the right setup. What's the right setup? Got to see how it trades, but I think this is going to resolve itself much higher in wheat. Corn. God, it's amazing. All-time record long, some smart money, and it cannot get out of its own way. Had a couple of good days last week, but a crummy day on Friday. Not time yet. Beans continue to stink. Record longs here as well by smart money, and it's not working out yet. So I wouldn't go near it. Sugar, garbage still, nothing. Nothing to do here. Sit back, wait, and watch. Cotton, nothing. Nothing with nothing equals nothing. Coffee, nothing. This is how commodities bottom. They're very long and very frustrating, and then all of a sudden they take off on a huge move. And here is cocoa. Not really interested in this either. So nothing in the commodity space. Here's the GSG. Could it be bottoming? Yeah, it looks a lot like crude because it's 65% crude. Nothing exciting. How do you know there's smart money in them? Oh, Rick, because the smart money called me and said I'm smart money. No. I used the Commitment of Traders report. It's a public report that comes out from the CFTC, and it tells you who's buying and who's selling, meaning there are large speculators, hedgers, which are considered commercials, and non-reportables, which are the small mom-and-pop traders. So usually mom-and-pop traders are the exact opposite of the commercials, the hedgers. The hedgers and the commercials are smart money. Mom-and-pop are dumb money. So that's how I get smart and dumb money. Let's see. Anything else did I miss? Because there's not much on a lot of stuff, and I wouldn't be surprised if it's that way for a while longer. Just don't get bored into trading when you don't have high conviction. That is a mistake. Other questions, comments, concerns? Question, comments, concerns? This is a quick one. Yes, Scott, I absolutely would play a short if I could find one that I really liked. There's a bunch that are in setups that look like they could be good shorts, but I'm not going to press a short. We're still in a strong bull market. Now, if we roll over to the downside, then I would, yeah, you can certainly sell credit spreads and do a lot of other option plays. I just don't see anything I love here. And I've been sitting with the same positions for a long time. EWG, which is Germany, went from being super strong to neutral to downright weak. I mean, it's due to bounce, but I want to see a little more constructive activity before I say, we just saw this could be the bottom right here. Get a hammer, get it confirmed with doji or spinning top, whatever you want to call it. Call it a doji. Stochastics are oversold. This could be the bottom, but I want to see a little more constructive trading before I'm sticking my neck out like a giraffe. What do you think of TBT? I think that it's the opposite of TLT, and if you're not already in it and enjoying it, I wouldn't go ahead. Personally, I wouldn't buy it right now. Let's see. Apple, Tiny does in his own question and answer session before this one. Is the bond sell-off just a reaction to a possible rate hike or something more? To me, the bond sell-off is a couple of things. One is, the Fed really, for whatever stupid reason, they really want to raise rates. Why makes no sense, but so that's causing some upward pressure on bond yields, which are here. That's one. Number two, rates went up big on a relative basis in Europe, which translates over to here as well. And the economic numbers, frankly, are not bad. So it's hard to have a 10-year note at 2% when the economic output is just not that bad. Let's see. I believed you liked coffee a couple of weeks ago. Has your opinion changed? Yeah, John. I think coffee is going to resolve itself much higher. Okay, so I think it does a 50% move or a 100% move, but it's really hard to hop on board when the bottom is just getting so frustrating. Now you could play a really small position in coffee and just hold on and let it ride. But in the short term, it's not doing anything constructive yet. Long term, I think it's going to go up big. Let's see. My opinion on robotics? Oh, no. Rudix. I don't know what you're talking about. I don't even know how you would begin to go through the companies. It's not really my area of expertise, like a lot of things. Google and Baba, Tiny does in his stock session before this one. You got to be a member of the Winning Edge Trader Inner Circle to come to that. Do we need to look at the 10-year and the 30-year to get a real clue, Johanna? No, you do not. You can look at either one. They trade so similarly. I'm an old school guy. I like the 30-year, but the 10-year is more widely followed now in the industry. But they trade so similarly anyway. Is QE totally over? Could bonds have a really bad year? I don't think QE is totally over long term, but it's certainly over. I mean, they're going to go through a rate hike cycle, so we're not going to see any QE for this year and next year, in my line for sure. Could bonds have a really bad year? Anything is possible. Whoops. Anything is possible. They've already had a big decline. Could we go back down and give up the year's gains? Sure. Could we collapse from there? I don't think so, because Europe is still too weak, in my opinion. So should banks and semis be sold in a strength if we have a bounce from here, Rob? Should banks and semis be sold? Too early to tell, in my view, Rob. And let's say you own semis and they run to 104. I think you got to see what the other indices are doing to decide. From my view, if semis and the banks go on a further run and you own them, but the indices begin to reverse and look crummy, I would sell half my position and then I would put a stop in on the other half. That's what I would do personally. Any other questions? Going once, going twice, 3 times a lady. All right, so that's it for tonight. I'm going to take a shower because I smell. Having coached a 2.5-hour all-star practice for my daughter, and then my 7-year-old started crying because I didn't take him for his own workout. So I'm back to the field, worked out with him for an hour. And that is all from me. So hope you guys have a good week. Keep in touch with Tiny for any questions, comments, concerns, and we shall see you same time next Sunday night. Bye-bye.